Good afternoon. Everybody, please come to this wonderful chapter, single entry system. So, question number 12 now, a very interesting question. You will not find such question in your study material, but they ask in the exam. They may not ask everything in your study material. We have to practice extra. If you want to get extra marks, extraordinary result, you will have to perform little extra. So this is one such question which will challenge you, which will test your intelligence. So let us come to question number 12. Mr. Pranlal is a dealer in fertilizer. He purchases some chemicals, mixes them to manufacture the fertilizer. He has prepared the following statements. He requires you to examine them and prepare trading and P&L account and balance sheet after taking into account the additional information furnished. So this is one Mr. Pranlal. Mr. Pranlal himself has prepared trading and P&L account. This is not a correct P&L account. What he has done? He has written trading and profit and loss account as on. Should it be as on or should it be for the year ended? Tell me, should it be as on or should it be for the year ended? So he does not know accounts, so we have to help him. And this is 31st March 11 year ending date. And now see what this fellow has done. He has written to stock on 31st March 11. This is closing stock because year ending date is 31st March. And this chap has written closing stock on the debit side, two purchases, two expenses, buy sales. Amazing. He has written buy creditor in the trading account. This is a complete serious mistake. How can you write creditor in the trading account? But he has written. Then buy stock on 1/4/10. One more problem. Opening stock he has written on the credit side. This is also wrong. Opening stock he should write on the debit side. Closing stock he should write on the credit side. But he is Mr. Pranlal and by other income. He has written trading and P&L account, but he has not divided into trading and P&L account part. So this other income will come in P&L account. And then he has written by net loss. This is wrong. We need to recalculate, right? So do you agree with all this? No, most of the items he has written is wrong. Now he has prepared a balance sheet. Who has prepared? Pran Lal has prepared a balance sheet. Now for balance sheet he has written for the year ended. What he should have written? Do we write for the year ended or do we write as at? You should have written as at. For 31st March 2011, capital account, opening balance on 1st April 2010, 3 lakh. This is right. Less, loss, 5 lakh. 3 lakh minus 5 lakh, 8 lakh. Amazing. His maths is also poor. He is not only a poor accountant, his maths is also poor. Yes or no? Say yes. So this loss is wrong. We have to calculate the correct profit or loss. Then loan taken on 1st April 10 at 12%. This is loan, but interest is not appearing. Interest is not appearing. See in the P&L account, can you locate any interest here? No. So he has not provided for interest. So what we will do, we as a student will have to provide for interest on 1 lakh at 12%. So that is 12,000. That is 12,000. Entry would be interest account debit 12,000 to interest accrued on loan 12,000 to interest accrued on loan 12,000, and then surplus difference 4,50,000. This is mistake. If he could not tally the balance sheet, what he did, he has put the difference as surplus difference. So this is useless. This 4,50,000 is useless. See the asset side. In balance sheet, one more thing he has done. He has written two. Buy. Do we write two and buy in the balance sheet? No. We should just write debtor, cash, bank, closing stock. Now see this problem. This fellow has written here closing stock on 31st March 8 lakh. And here in the balance sheet, he has written 10 lakh. We don't know which figure is right. That is a big time problem for us. Whether I should take closing stock 8 lakh or 10 lakh. So what I think he must have done, probably he would have added this 8 lakh and this 2 lakh. Both he must have added and he has put it in the balance sheet. Is it right? Next line is on inquiry, the following information is obtained. Everybody will pay special attention to this question. It's not in your study material, but they have asked for 20 marks in the past examinations. He is entitled to a rebate of 10% on the listed price of a chemical. So he will get a rebate of 10% on purchase. The purchase during the year for the said for the year ended 31st March 11 of the said chemical at the listed price included in the purchase is 4 lakh. So there is a 4 lakh of purchase made on which he should get 10% rebate, but he has not recorded the rebate. Probably this person does not know accrual method of accounting. That is why he has not recorded interest accrued, he has not recorded rebate receivable. So the entry for this transaction will be rebate receivable account debit 40,000, 10% of 4 lakh to rebate 40,000 to rebate on purchase. To rebate on purchase. This rebate on purchase, we will show it as a deduction from purchase. We'll show it as a deduction from purchase. Show it as a deduction from purchase, and rebate receivable will go to balance sheet. Rebate receivable will be shown in balance sheet. So this was an important adjustment. The details of the expenses are as under. So then he has incurred some expenses. You see on the screen you will see now there is an expense here mentioned 7 lakh rupees. Tick mark. The breakup of these expenses are given below. Mixing wages, this I will transfer to trading account. Administration, I will transfer to P&L account. Mixing equipment purchased, capitalized. It is equipment. It is a fixed asset. So he has transferred capital expenditure also in P&L account. Construction of factory shed, again capitalize. Again capitalize. Advance for raw material. Advance for raw material. There is a note given below which is dealing with advance for raw material. We'll see below. Somewhere below there is a note for advance. So right here read note below. There is some note on that below. So what you will do? 7 lakh rupees you will not transfer to P&L account. 2 lakh trading account, 2 lakh administration account. These two we will capitalize, and for this there is a note below. Only after reading the note we can do anything. Point number 3 says a certain raw material was received on 2nd April. So raw material was received. So raw material received means raw material will remain in your closing stock because it has been received. Certain raw material was received on 2nd April. Sorry, date is 2nd April. Raw material was received on 2nd April. The invoice for which amounting to rupees 1 lakh is included in purchases. So let us read again. This is a new adjustment. Even after solving around 20 questions, we are still getting new adjustment. It says some raw material was received by or on 2nd April. The invoice for which amounting to rupees 1 lakh is included in purchases. So that means this raw material is not included in the closing stock because it was received on 2nd April, but entry for purchase has already been passed. What has happened? Again understand. Entry for purchase recorded. Entry for purchase recorded, but raw material not recorded in closing stock. Raw material not recorded in closing stock. So I have two choices now. Either I can reverse the purchase entry or I can add raw material in transit. Raw material in transit in the closing stock. So the student will advise me what should I do. Option A, reverse the entry for purchase, and option B, include raw material in transit in the closing stock. Which option is better? Should we reverse the purchase entry or should we include raw material in the closing stock? Please reply. Your reply will be appreciated. Everybody should try. Show your intelligence. You are an accountant. So the answer is B. B is the right answer. We will add it in the closing stock. Purchase has been recorded, but because this raw material was received after the year end, it was not included in closing stock. So you have studied one term called goods in transit. This was goods in transit. So I will show it as goods in transit, and the answer is add in closing stock as goods in transit. Add in closing stock as goods in transit. Next point, a customer who purchased the goods for rupees 1 lakh. A customer who has purchased the goods for rupees 1 lakh has not taken delivery. Customer has purchased the goods. So we have already recorded sales. Company has already recorded sales. It says customer who has purchased the goods for 1 lakh. So they may have passed the entry cash account debit 1 lakh to sales account 1 lakh. Or they may have passed the entry customer account debit to sales account 1 lakh. But he has not taken the delivery. If he has not taken the delivery, then such stock should not be shown as our stock now. Because on one hand you are recording sales also, on the other hand you are showing the same item in the closing stock. So the question itself says the value of such stock was inadvertently included in the closing stock. Inadvertently means by mistake. By mistake, it was included in the closing stock. So here also I am going to give you two options. Tell me which option is right. A, reverse the sales entry. Reverse the sales entry. And option B, reduce from closing stock. Reduce from closing stock. Which option is right? Either you reverse the sale or reduce from closing stock, or reduce from closing stock. Reply. Option A, option B, reverse the sale or reduce from closing stock because goods have been sold. So such goods should not be included in the closing stock now. Dheeraj is right. The answer is reduce from the closing stock. So what is the treatment for adjustment number 4? Minus from closing stock, because these stocks have been sold and we will assume that the property in the goods have been transferred to the buyer. What we will assume? Property in the goods have been transferred to the buyer. So all the students have replied B. You seem to be some genius type student. Question adjustment number 5. He had entered into joint venture with Mr. Babu Ram. Oh, so this question has one joint venture adjustment also. Have you ever heard about joint venture? Joint ventures are partnership for specific purpose, okay, and some specific duration. Their partnership for carrying out some specific transaction and for some specific duration only. So that is joint venture. What happened now in joint venture? The sales made on account of joint venture was included in the sale 2 lakh rupees. Oh my god. What they have done? You come to your question starting point. This sale of 5 lakh includes sales of joint venture rupees 2 lakh. Includes sales of joint venture rupees 2 lakh. So that I need to reverse. I will have to pass the entry sales account debit 2 lakh to joint venture with Babu Ram 2 lakh. Sales debit 2 lakh to JV with Babu Ram 2 lakh. Okay, so that is one rectification of error I have to perform. Next point, he has paid rupees 1 lakh for purchase of raw material. He has paid rupees 1 lakh for purchase of raw material. It has been included in the expense. Oh my god. It has been included in the expense. So I will first take you to the adjustment which they are talking about. This is the advance for raw material. It should have been debited to joint venture account, and by mistake he has debited expense account. So the rectification entry for this will be joint venture account debit 1 lakh to expense account 1 lakh. Joint venture account debit 1 lakh to expense account 1 lakh. Now it says his share of profit in the venture was determined to be 50,000. What is the share of Pranlal? 50,000. Entry will be joint venture account debit to general P&L account 50,000. Joint venture account debit to general P&L account 50,000, but he has not done that entry. The amount paid for settling the account was wrongly debited to debtor account. Oh my god. This is joint venture account. Sale is 2 lakh. Expense is 1 lakh. 2 lakh minus 1 lakh, profit is 1 lakh. So in that profit there are two partners. One is Pranlal I will write Pranlal and one Babu Ram. So share of both the partner will be 50,000, 50,000. Share of both the partner will be 50,000, 50,000. Babu Ram share, he has paid. He has paid Babu Ram share, but he has debited debtors account. By mistake, he has debited debtors account. So the rectification entry here will be Babu Ram account debit 50,000 to debtors account 50,000. Babu Ram account debit 50,000 to debtors account 50,000. So this is all about joint venture. New adjustment for you. And then sum received as cash sale of 5 lakh. Sum received as cash sale of 5 lakh. He has included in creditor. Amazing. He has included in creditor cash sale. So the rectification entry will be creditor account debit 5 lakh to sales account 5 lakh. Creditor account debit 5 lakh to sales account 5 lakh. Next, point number 7. An invoice of rupees 50,000 for goods received, underline this much, for goods received on 25th March. Goods were received on 25th March, and now read invoice and included in the stock. Goods were received and included in the stock, but the invoice of 50,000 was received only on 1st April 2011. The invoice was received only on 1st April 2011. Goods came first, invoice came later. Goods came first, invoice came later. So now what we will do, we have two choices. So I will again give you two choices for this 7th number adjustment. One option is reduce from the stock. Reduce from the stock rupees 50,000, and the other option B is to pass entry for purchases, because goods have been received. So pass entry for purchases. Purchase account debit to creditors account 50,000, 50,000. So what will you do? Invoice was received on 1st April. This is the date when invoice was received. Goods were received on 25th March, and goods have been included in the stock also. So which is the right treatment for this? Should we remove from the stock or should we record the purchases? It seems purchase have not been recorded. So please suggest me. The answer is B. We will record the purchases. Goods have been received means property in the goods have been transferred. Ownership in the goods have been transferred. Many times it happens that invoice is received later, because the seller may not give you immediately invoice. Sometimes seller will give you invoice later. Then in that case, we will record the purchases. So the entry for this transaction, purchase account debit to creditor account. Chaurasia is right. Point number 8. Oh my God, such a lengthy problem. Other outstanding are. So these are normal entry for other outstanding expenses. Factory shed related outstanding expense 50,000. The entry for this will be factory shed account debit to outstanding expense. Other expense outstanding is 50,000. Expense account debit to outstanding expense 25,000. In the first entry 50,000 factory shed will be capitalized. Outstanding will appear in balance sheet. In the second case, this expense 25,000 will be transferred to P&L account. Depreciation 5% on factory shed, 10% on equipment on the closing balance. Very easy. One new adjustment again for you. It says the bank balance of rupees 80,000. The bank balance of rupees 80,000, which is 80,000, first I will show you on the screen. Asset side, tick mark. They are talking about this adjustment. The bank balance of rupees 80,000 includes the encashment of his personal fixed deposit of 50,000 with the bank. So he has made some withdrawal from his fixed deposit, which is personal fixed deposit. So this is a personal transaction, but he has deposited in the business bank account. He had forgotten to credit his capital account with this amount. He has deposited 50,000 rupees in the firm's bank account. He has deposited 50,000 rupees in the firm's bank account and he has forgotten to credit his capital account. So the treatment of this last adjustment is just simply go to capital and you add in capital 50,000, capital introduction. This is called error of partial omission. He has debited bank account correctly, but he has not given credit to capital account. So he has only passed debit effect. Bank account debit 50,000. To capital he should have done. To capital 50,000 he should have done, but he has not done. To capital 50,000 he should have done, but he has not done. So now we will do it. We will just simply add 50,000 in capital. No need to adjust bank. Bank is already correctly debited. Credit effect was not given. That effect we will give now. Is it right? So you are free to ask any query till now. And if you don't have query, then we'll draw some working notes, some main format followed by working notes. And this is a very wonderful question. Ready? Any query? If you don't have query, so let us start our process. Write down trading and profit and loss account. Trading and profit and loss account for the year ended 31st March 2011. Trading and profit and loss account for the year ended 31st March 2011. Draw the format. Then write down balance sheet as at 31st March 2011. Balance sheet as at 31st March 2011. Balance sheet as at 31st March 2011. Keep 20 lines blank in balance sheet. Keep around 20 lines blank in balance sheet. After balance sheet, write down working note 1. Working note 1. Debtors account. 6 or 7 lines. Then working note 2. Working note 2. Creditor account 6 to 7 lines. Creditor account 6 to 7 lines. Working note 3 purchases account. Working note 3 purchases account. There are some errors in purchases account also. Working note 3 purchases account 6 lines blank. Working note 4 sales account, because without drawing the format we can't give double effect properly. So all of you please follow the process. Sales account 6 7 lines, because sales figure is also not correct. Working note 5 write down factory shed account. Working note 5 write down factory shed account. Factory shed account. Working note 6 write down. Working note 6 write down. There is one joint venture in this problem. Joint venture with Baburam account. Joint venture with Baburam account. Joint venture with Baburam account. Working note 7 Baburam account. Working note 7 Baburam account. Working note 7 Baburam account. Working note 8 calculation of closing stock. Calculation of closing stock. Calculation of closing stock. Right hand side rupees. Right hand side rupees. I hope all of you are ready with this format. Ready? So can we start solving this question now? Keep question in front of you. Stock on 31st March 11 8 lakh. So that you write in working note 8. Point number A. Working note A. Point number 8 closing stock as reported. Closing stock as reported 8 lakh. Closing stock as reported 8 lakh. And then there is a purchase, working note 3, purchase account to balance brought down. To balance brought down means balance given in the question, not the opening balance on the first day of the year. So two purchases write down 8 lakh. Two purchases 8 lakh. And expenses they have given 7 lakh. The breakup of that expense is given in point number 2. Come to adjustment number 2 below. Come to adjustment number 2 below. In adjustment number 2, it's written mixing wages 2 lakh. Mixing wages write in trading account, debit side, it's a direct expenditure. Mixing wages trading account 2 lakh. In P&L account debit side, to administration and selling expense, to administration and selling expense 2 lakh. Continuously question should be in front of you. Mixing equipment purchased on the balance sheet asset side. On balance sheet asset side, mixing equipment. In the inner column, mixing equipment in the inner column, 1 lakh. Just keep it here, I will come back to this. Construction of factory shed. There is a working note number 5. Working note 5, factory shed, debit side, to expenses. This is 1 lakh. To expenses 1 lakh. And this advance for raw material is actually expenditure related to JV activity. So advance for raw material we will write in joint venture account to expense account 1 lakh. In bracket write advance for raw material. Later on you will forget, so write it down. To advance for raw material 1 lakh. So this completes the 7 lakh rupees bifurcation of expense. Now you come back to your question. Trading and P&L account credit side, they have written buy sales 5 lakh. So I will come to sales account working note 4. Buy balance brought down, write down here 5 lakh. Creditor account working note number 2. Buy balance brought down. Creditor is 10 lakh. Any query till now? Yes, Moonrise, any query? No query. We'll go to stock on 1st April 2010. That is opening stock. That is opening stock. So we will write in trading account, trading account to opening stock. To opening stock is 2 lakh. To opening stock 2 lakh. And then other income, buy other income in P&L account. Buy other income 1 lakh. Buy other income P&L account 1 lakh. Net loss we will not write. Then next line is balance sheet for the year ended 31st March 11. Capital 3 lakh rupees. So write here capital in balance sheet, liability side, capital opening balance 3 lakh. Inner column. Less loss don't write. Loss we have to recalculate. Then we have loan. We have loan. Loan you write down here, loan 1 lakh. And interest accrued on loan, interest accrued on loan 12% of 1 lakh, 12,000. Interest accrued on loan 12,000. P&L account debit side to interest on loan, to interest on loan 12,000. P&L account debit side to interest on loan 12,000. So second effect is also over. The next line on the balance sheet left side is surplus difference. Ignore that. Debtors 2,50,000. So debtors you come to debtors, to balance brought down, to balance brought down. Debtors to balance brought down 2,50,000. Cash in balance sheet. In balance sheet write down cash. Closing cash is right, 20,000. Closing bank is also right. Closing bank is also right, 80,000. Closing stock we have already made a working note. So this 10 lakh you will not write. Closing stock 10 lakh we will not write. We will find out the correct figure. We will find out the correct figure. Next is your adjustment number 1. He is entitled to a rebate of 10% on the listed price of a chemical The purchase during the year ended 31st March of the said chemical at the listed prices included in purchases amounted to 4 lakh. So on purchases he gets a 10% rebate which he has not recorded. So we will record now. Entry will be rebate receivable account debit. Rebate receivable account debit for this first adjustment. Rebate receivable account debit to rebate on purchases. To rebate on purchases 40,000. To rebate on purchases 40,000. So now this rebate receivable will go to balance sheet. Rebate on purchase is related to purchase will reduce the amount from total purchase. So first we will come to balance sheet, asset side. Balance sheet, asset side, write down rebate receivable 40,000. And in P&L account, trading account, write down two purchases. Amount we don't know. Less rebate, inner column. Less rebate, inner column 40,000. Okay. So right now we are solving question number 12. Adjustment number 2 we have done. Adjustment number 3 now. A certain raw material was received on 2nd April. Invoice for which amounted to rupees 1 lakh is included in purchases. So in adjustment number 3, purchases are already recorded, but the stock was not updated because these stock were in transit. So what I will do, I will adjust in closing stock. Point number B, add goods in transit. Add goods in transit. And the amount is 1 lakh. Add goods in transit 1 lakh. Adjustment number 4. A customer who has purchased goods for rupees 1 lakh has not taken delivery. The value of such stock was inadvertently included in the closing stock. So here goods have been sold, but the customer has not taken delivery. So they have included in sales also, and they have included in closing stock also. So we will remove from the closing stock less goods sold but not delivered, wrongly included, in closing stock, wrongly included in closing stock 1 lakh. Just keep it here. We'll come back to this. Right? Sales will not adjust. Next, point number 5. Now this question is not clear. This question is not clear whether this 1 lakh is cost value or sale value. Oh my God. So we will assume this is cost value. Otherwise, you will have to convert it into cost. But to convert it into cost, you need the gross profit ratio, which is not given. So therefore, we will assume this 1 lakh rupees is cost of goods sold only. Hence, directly deducted from closing stock. And we are also assuming in point number 4 that the ownership in the goods have been transferred to the customer. So sales have been completed. Sales have been completed. Point number 5, he has entered into joint venture with Baburam. Sales made on account of joint venture with Baburam is included in sale of rupees 2 lakh. So the entry for this will be rectification entry, sales account debit, working note 4, sales account debit to joint venture with Babu Ram 2 lakh, 2 lakh. And in working note 6, credit side, buy sales 2 lakh, buy sales 2 lakh. Okay. Now there is one more point there. He paid rupees 1 lakh for purchase of raw material. This entry we have done. It was included in the expenses. This we have already rectified. His share in the profit was determined to be rupees 50,000. So now you come to joint venture with Bapuram. You will find the total profit is 1 lakh. And out of this 1 lakh, Pran Lal should get 50,000. Babu Ram should get 50,000. Pran Lal and Babu Lal seems to have entered into an equal partnership because Pran Lal share is 50,000, Babu Lal share is 50,000. Where will you transfer this Pran Lal share 50,000? Pran Lal share 50,000 will be transferred to P&L account by profit on joint venture with Babu Ram 50,000. Working note number 6. By profit on joint venture with Babu Ram 50,000. And then I will go to Babu Ram account credit side. Working note 7. By joint venture with Babu Ram 50,000. This is his share of profit. Come to your question again now. Come to your question, it says amount paid for settling the account was wrongly debited to debtor's account. So we have made the payment to Babu Ram, but it was wrongly debited to debtor's account. So the rectification entry will be for last line. Babu Ram account debit 50,000 to debtor's account 50,000 to debtors 50,000. So please come to Babu Ram account to debtors. Now you see Babu Ram account is telling. Babu Ram account is telling. So I'll put a big tick mark. Joint venture with Babu Ram account is also telling. This also I'll tick mark. And I'll go to debtors account working note 1 credit side. Working note 1 credit side by Babu Ram. By Babu Ram. Oh Babu Ram. 50,000. Next. Point number 6. Sum received as cash sale for rupees 5 lakh was included in creditor. Rectification entry would be creditor account debit to sales account. Creditor account debit side to sales account. You will write 5 lakh and sales account by creditor. This is rectification of error which they teach you in 11th standard accounts. By creditors 5 lakh. What is given according to that? This is the entry. Next point number 7. An invoice of 50,000 for goods purchased was received on 25th March and included in the stock was received only on 1st April. Invoice was received on 1st April. Goods were received on 25th of March. So no adjustment in the stock, but purchase were not recorded. Now you will record purchase. Purchase account debit to creditor account. purchase account debit to creditor account 50,000. Creditor account buy purchases 50,000. Buy purchases 50,000. Next line, point number 8. Other outstanding expenses were as under. For erection of factory shed 25,000. Come to working note 5. Factory shed account debit side. Listen to the entry. The entry will be factory shed account debit to creditors for factory shed. To creditors for factory shed. So I will go to factory shed account debit side to creditors for factory shed 50,000 and creditor for factory shed in the balance sheet directly, liability side of balance sheet, creditors for factory shed outer column 50,000. Creditor for factory shed 50,000. Point number next, other expense outstanding is 25,000. Other expense outstanding 25,000, the entry will be expense account debit to outstanding expense. Expense we will write in P&L account to other expenses. To other expenses P&L account debit side 25,000 and in balance sheet liability side outstanding expenses 25,000. Outstanding expenses 25,000. Point number 9. Provide depreciation at 5% on the factory shed and 10% on the equipment on the closing balance. So come to working note 5. Working note 5, factory shed by depreciation 5% of 5% of this is 1,50,000, 1,50,000. 5% of 1,50,000, 7,500 and by balance carried down 142,500. By balance carried down 142,500. Is it right now? So depreciation transfer to P&L account, by balance carried down transfer to balance sheet. So please come to P&L account debit side to depreciation inner column factory shed 7,500 and in balance sheet write down factory shed outer column 142,500. Factory shed 142,500. On mixing equipment the depreciation rate is 10%. Balance sheet asset side mixing equipment less depreciation at the rate of 10%. So that comes to 10,000. Outer column 90,000. Outer column 90,000. P&L account debit side depreciation on mixing equipment 10,000. Total depreciation 17,500. Total depreciation 17,500. Now point number 10 is last point. Almost we are towards the end. Bank balance of 80,000 includes encashment of his personal fixed deposit of 50,000. He had forgotten to credit his capital account. So this is only partial error. Debit bank done. Credit capital not done. Now we will do it. So come to balance sheet, add capital introduced, add capital introduced 50,000, add capital introduced 50,000. So we have completed all the transaction given in question. What are we supposed to do now? We are going to close these accounts. Close the debtor account. Buy balance carried down 2 lakh. Buy balance carried down 2 lakh. This 2 lakh will be transferred to balance sheet, asset side. So balance sheet asset side, write down debtors, working note 1, 2 lakh. If you can write working note every time, it will be great. Now come to creditor account, to balance carried down, 5 lakh 50,000. Is it right? 5 lakh 50,000 is right, check. Creditor 5 lakh 50,000, balance sheet liability side. Creditors, working note 2, 5 lakh 50,000. Creditor right. Purchases account credit side write down. By trading account, 8 lakh 50,000. And sales account also debit side. Sales account to trading account, balancing figure. Sales account 8 lakh. This 8 lakh, this 8 lakh 50,000, we are going to transfer to trading account now. So come to trading account, debit side, purchases write down 8 lakh 50,000 minus rebate 40,000, outer column 8 lakh 10,000. Credit side, buy sales, working note 4, 8 lakh. Wherever possible, write working note reference. Later on, easy for you to check. So I have closed these 4 working notes now. 5 also close, 6 also, 7 also. Last one is closing stock. Take the total 8 lakh plus 1 lakh minus 1 lakh. So we are back to 8 lakh only. So point number D, write down therefore closing stock. Therefore closing stock. 8 plus 1 minus 1, 8 lakh. 8 lakh is the closing stock. So I will come to trading account, by closing stock, working note 8, 8 lakh. On the asset side, write down stock 8 lakh. On the asset side, write stock 8 lakh. Now write down to gross profit carried down. Who will tell me gross profit first? Tell me gross profit. Anybody for gross profit? Gross profit, check the calculation. Anybody gross profit? 3,90,000. Very good. By gross profit brought down 3,90,000. By gross profit brought down 3,90,000. By gross profit brought down 3,90,000. Now find out the net profit. Moonrise is right. Net profit. I am waiting for net profit figure now. Please reply. Pawar is right. Net profit figure Pawar. Yes, Pawar, come on. Net profit figure. I am getting 285 500. 285 500. Add in the balance sheet net profit 285 500. Add capital also. So capital in the outer column 6 lakh 35 500. 635 500. 635 500. Tanya is right. Now tell me the balance sheet total now. Please give me the balance sheet total now. 1372500. Check the total. 1372500. Anyone getting 1372500? Yes, Jan is right. Anyone else who got the answer? Come on, fast. Tanya is right. Anyone else this side? Okay, Chaurasia is right. Any query on this question? Any query on this question? No query. If you don't have query, we'll go to next question. Come on, any query? It seems there is no query. So no problem. Can we go to the next question now? Say yes. So we'll go to the next question now. Next question is question number 2. Question number 2. One query, can you explain the entry for profit of in joint venture? Very easy. On the screen, working note number 6. Two partners were there, Pranlal and Babu Ram. The joint venture, sales of the joint venture is 2 lakh, and expense of the joint venture is 1 lakh. Total profit is 1 lakh. 50,000 belongs to Pranlal, 50,000 to the other venturer whose name is Babu Ram. So they have passed these entries. One entry will be joint venture with Babu Ram debit 50,000. Those who want to write can write to P&L account because this is our share. Our share in joint venture will transfer to P&L account. Another entry will be joint venture with Babu Ram account debit 50,000 to Babu Ram's account. These are the entry relating to joint venture. Is it right now? Any query? And then they should have paid Babu Ram They have paid also, but instead of debiting Babu Ram to bank, they have debited debtors to bank. So as a result, we have to pass a rectification entry: Babu Ram account debit to debtors account. Is this right now? Is this right? Okay, any other query? There is no other query. Now we'll take one more important question, number 2. Question number 2. Similar questions are there in study material. So which today you will practice from the study material. Similar question in study material, not same, similar type. Okay, so find out some time today after the class and solve all study material problem. Homework for today: all questions in our class that we have completed plus study material questions, you will find most of them are similar to what we have done, and plus you also solve 10 extra questions. This will boost your confidence, and in case of doubt you will ask me, right? So please come to question number 2, a very different problem. Do not draw any format, just wait for instruction. The following is the balance sheet of Messrs XYZ on December 31st, 2009. What is this balance sheet date? 31st December 2009. Balance sheet: liability side, creditor, bills payable, capital X, Y and Z. Capital is 90,000. Current account, current account X is 1440, X is 1440 and Y is 1020. Just wait a minute. One student is asking, can we credit purchase rebate to purchase directly? Yes, you can. Rebate receivable account debit to purchase account. This can also be done because ultimately we have to deduct from purchase. This query is relating to previous query. Doesn't matter, you have to finally reduce from purchases. So back to this question number 2, liability side we have read. Asset side: cash, bank, debtor, stock, furniture, plant. One partner Z has a current account debit balance and two partners have credit balance. Any query on this question? Till now, question number 2 continues. XYZ share profit and losses in the ratio of 3 is to 2 is to 1. After charging interest on capital at 6%, so this is one interest adjustment also. Interest will be charged on capital account, not on current account. Not on current account. So let us just go behind and check. The student will reply, how much interest at 6% will be paid to X, Y and Z. Student will reply, X will get an interest of 45,000 into 6%. Come on. X will get 2700. Y will get 30,000 into 6%, 1800, and Z will get 1500 into 6%. Come on, reply, 900. So partners are entitled to 6% interest on capital. Entry will be interest on capital account debit to capital account, to partners capital account. Interest on capital is charged to P&L account or P&L appropriation account, and capital account will be credited. Capital account will be credited, or in case if you are maintaining current account, So instead of capital account, usually the effect is given in current account. Capital account is kept intact. It is called fixed capital system. So all operational adjustments are given in current account. So Tanya is right, 2700, 1800, 900. Very good. Amazing. Wonderful. Next point. During the year, make it 2010. During the year 2010, the monthly drawing, underline monthly, drawing was as under X 1200, Y 900, Z 750. So student will multiply by 12. This will give you annual drawing. So please tell me what was annual drawing of X. Annual drawing of X will be 14,400. Come on, try next one. Y 10,800 and Z will be 9,000. So this will be their annual drawing. Next is on 31st December 10, the assets and liabilities of the firm were as under. So now you are given closing balance sheet, assets and liabilities, cash, stock, plant, bills payable, debtor, furniture, creditor, bank overdraft. Next line, you are who? You, you are asked to ascertain the profit made by the firm in 2010. So first question is what is the profit made by the firm? Second, prepare the balance sheet on 31st December 10. Is it right? So I will give you a chance to tell me what is the profit for year 2010. Student will reply. The one who will give me correct answer will get a reward. What was the profit for the year 2010 made by this firm? Give me the net profit figure. Give me the net profit figure and get a reward. And get one reward. Okay. So I am waiting for your answer. Anybody, what is the profit for the year? Today you have to show your skill. Let the world know that you are an intelligent person. Your intelligence is at stake today. Two minutes more. 1 minute more. Just 1 minute more now. 30 seconds more. 30 seconds more. Please reply. What is the profit for the year 2010? Anybody wants to reply? Still not answering? 5 seconds more. 5 seconds more. What is the profit for the year 2010? Please reply. Your name will be added in the list of intelligent student. Yes, my dear student, what happened to you? Okay, so none of you could reach the answer. It seems I will have to only take the charge. So I will have to explain it to you. In this question, you can't prepare P&L account because P&L account items are not given. But you can find out the profit by preparing partner's current account. Do not write, I am explaining it to you. Partner's current account, how it is prepared. Usually we write by balance brought down. Then we write by interest on capital. Then we write by share in profit. In this question we have two drawing and we have two balance carried down. Right. Can I not find this profit figure? I have the closing balance. By preparing a balance sheet, I will get the closing balance in capital and current account. By preparing a closing balance sheet, I can get closing balance of current account. Drawing figure you have just now told me. You had told me drawing is 14,400, 10,800 and 9,000. So that will be total of this side minus if I do this side total minus interest on capital and minus balance brought down, the balancing figure will be profit of the company. So first we will do this calculation for all three partners together on totality basis. Once we get the profit of the firm, this will be the balancing figure. I can apportion it in the ratio of 3 is to 2 is to 1. So one student has given the answer 43,200. Let us check whether this is right or not. Seems to be the right answer. So what we will have to do, first we will have to prepare format. Okay. First we will have to prepare these three formats I have to prepare. So dear student, first format write down statement of profit and loss. This time we will follow a different method. This time we will find out the profit by the with the help of current account figures. I have told you here, we have opening balance of all three partners, we have interest on capital, we have drawing, and we can find out the closing balance from the balance sheet. So the missing figure will become total profit. So in the calculation what I have done, I am explaining and then you will write. We will start from here. We will add the drawing. We will deduct the capital and will deduct the opening balance. So the total will be profit for the year, which we will apportion in the ratio of 3 to 1. Agreed? Say yes. So now you are ready to draw the format. Statement of profit and loss account. Statement of profit and loss account. Right hand side two columns. Rupees, rupees. Then you write down point number A, closing current account balance. Closing current account balance add drawing, add drawing, add drawing. Then write down point number C, less interest on capital, less interest on capital. Drawing, write down in 3 lines X, Y, Z. Then write down add interest on capital, add interest on capital, X, Y, Z. Point number D, less opening current account, less opening current account. This balancing figure will be profit. Capital is fixed. Capital is fixed. So no problem with capital. Okay. Capital is fixed. After this format, you prepare the next format, which we are going to simultaneously complete also. Balance sheet as on 31st December 2010. Balance sheet as on 31st December 2010. Balance sheet as on 31st December 2010. Okay. Are you ready? Balance sheet, liability side, liabilities rupees, assets rupees. Balance sheet we are going to complete now. In your question, in this last table, you are given these assets and liabilities figure, and plus in this figure, in this table, capital account is given. Capital account has not changed. So I am going to copy the same capital in the closing balance sheet also. So please write down sundry creditor. Check how much is sundry creditor in the last table. Sundry creditor in the last table. Check how much is that. Sundry creditor is 28,800. Then bills payable is 7,200. Overdraft is 18,000. Overdraft is 18,000. Capital, under capital X, Y, Z. Capital X, Y, Z. Same figure, 45,000, 30,000, 15,000, total 90,000. Current account X, Y, Z, keep it blank. This total will be the balancing figure right now. Later we'll prepare current account. Later we'll prepare current account and we will get current account balance also. Okay. Next line, asset side cash in hand. You will see the last table 900. Sundry debtors is 28,800. Stock in trade 30,600. Furniture and fitting 5,400. And plant and machinery 75,000. These are the items given to you which we have written. Now the missing figure is current account. The missing figure is current account here. So let us take the total of asset side first. 900 plus 28,800 plus 30,600 plus 5,400 plus 75,000. So asset side is 140,700 minus 28,800 minus 7200 minus 18,000 minus 90,000. So how much you are getting? How much is the current account balancing figure? How much is the current account balancing figure? I think creditor figure I have written wrong. Creditor figure is 10,200. Creditor figure is 10,200. So the answer is 15,300. 15,300 balancing figure. Chaurasia, Tanya, Sanket, Pawar, you are right. 15,300. So what I'll do, I will come to now first format, statement of profit and loss. Statement of profit and loss. First write down closing current account 15,300. This figure we will shift it here. Add drawing. Drawing of X. Drawing of X is 1200 into 12, 14,400. 900 into 12, 10,800. And this is 750 into 12, 9,000. So total drawing in the outer column will be 34,200. Less interest on capital. Less interest on capital. Under that write down X 45,000 into 6%, 2700. 30,000 into 6%, 1800. And 15,000 into 6% is 900. So that is 5400. 5400. Now the next point is opening current account. So opening current account will be, there are three partners. 1440. Look at your question book. 1440 is X. Question book liability side opening balance sheet 1020 Y. But current account of Z has a debit balance. So minus 1560. So this will be 1440 plus 1020 and minus 1560. So that is 900 rupees minus. These two are credit side item. These two are debit side item. So the balancing figure is profit now. Profit will be 15,300 plus 34,200 minus 5400 and minus 900. So that comes to 43,200. Tanya had got it right. 43,200. Now you write down in the inner column here X, Y, Z. Share of X will be 3 by 6, 2 by 6, Z 1 by 6. So 43,200 into 3 by 6. 43,200 is 21,600. Then 43,200 into 2 by 6, 14,400, and this will be 7,200. You can write in the first column. You can write in the first column 3 is to 2 is to 1. These are the individual share of profit. This is the total profit for the year. Only one student could give the right answer. Her name is Tanya. Okay, so what we will do now? We will prepare a current account also, because I need to write individual balance also. Individual balance is pending. So have you completed up to this two format? Please reply. Have you completed these two formats? Okay, yes. So now you come to partner's current account. Partner's current account. Current account credit side. By balance brought down. Three columns you will draw, X, Y and Z. Three columns you will draw, X, Y, Z. By balance brought down. X is 1440. Y is 1020. Debit side. To balance brought down. In Z column 1560. In Z column 1560. By interest on capital. By interest on capital 2700, 1800, 900. To drawing 14,400, 10,800 and 9,000. And then by P&L account we have just now computed 21,600, 14,400, 7,200, 7,200. To balance carried down, find out the balancing figure of X. 1440 plus 2700 minus 21,600. 1440 plus 2700 plus 21,600 minus 14,400. So that comes to 11,340. Yes or no? Yes. Try the next partner. Who will give me the answer first? Let us see. 1020 plus 1800 plus 14,400 and minus 10,800. 6420. 6420. And the last partner seems to have a debit balance, by balance carried down. In Z, you will get the difference on the credit side. So 1560 plus 9,000 and minus 900 and minus 7200, 2460. 2460. By balance carried down, 2460 balancing figure. So now what I will do, just last part now of this answer, these two figure and this figure, I will shift it to the balance sheet inner column. I will shift it to the balance sheet inner column. So please come to balance sheet one more time. Please come to this balance sheet one more time. Liability side current account. Liability side current account. X is 11,340. Correct. Y is 6420. Z in bracket 2460. And cross check, total should match 15,300. What is my cross check? The total should match 15,600. Then your answer is right. Is it matching now? 15,300? Yes, it is matching. You are right. This answer is over. Any query on this? Complete answer on the screen. Please check and tell me. Similar questions are there in study material of the institute. So you can practice today some question from study material also. You will be able to solve now. They give you problems of partnership, but then you have to find out the profit by preparing a statement of profit, add credit side item minus debit side item, balancing figure will be profit for the year. Balancing figure will be profit for the year. If you have any query on this question, I will be pleased to answer. I'll be glad to answer if you have a query. Anybody, any query on this question? No query? We'll do one more practice. Practice makes a man, woman, child, and a CA student perfect. Question number next. Come on, next question, guess. Which is the next question, guess? If you write nicely, you will get full marks. So we will solve question number 3 now. One more practice for you. Question number 3 on the screen. A and B are in partnership, sharing profit and losses in the ratio of 2:1. 2/3, 1/3. Books are kept on a single entry system. Useless people. Useless. And their statement of affair. Statement of affair means a rough balance sheet. A rough balance as on 31st December 2009 showed the following position. So this is the balance sheet on 31st December 9. This is the opening balance sheet. Opening balance sheet is already given to you. Capital A, B, creditor, loan, bills payable. Don't bother about these two written here. That is you. It has no implication answer. Okay. Now asset side freehold building, plant, office, furniture, stock, debtor, bills receivable, cash. Okay. On 31st December 2010. On 31st December 2010, the books disclose the following position. So on the asset side, you have debtors 8,000, creditor 8500, creditor on loan account means loan only 1600 rupees loan, cash 800 rupees, stock was valued at 4200, bills receivable amounted to 1400. And what about capital? So some capital balance is given here. In this question, we don't have current account, which means it is called fluctuating capital system. All adjustments will be made in capital account only. An examination of the cash book showed that during the year A had drawn on account of profit 1500 and B 600. That means out of their share in profit. Out of their share in profit. Whatever is the share in profit, when you withdraw that, it is called drawing of profit. When you withdraw your share of profit, it is called drawing of profit. It was 1500 and 600. A had in addition withdrawn 2000 on account of capital on 2010. Oh my God. This is your level of exam. You can't mug up the answer. They will give you something new. There are two types of drawing. There are two types of drawing. Drawing number one, drawing of share in profit. And second type of drawing is drawing of your capital contribution. So if your capital is withdrawn, it is called withdrawal of capital. And since the capital was withdrawn on 30th June, the interest after 30th June on the opening balance interest will be paid 10,000 rupees. But because he has withdrawn 2,000 rupees, then from 1st July onward, the interest will be calculated on 8,000 rupees. So I'll explain again. Up to 30th June, interest will be calculated on 10,000, and after that interest will be calculated on 8,000 because capital itself has reduced by 2,000. Okay, the partners agreed to reduce the previous valuation of plant and machinery by 5%, that is depreciation, and the furniture by 10% by way of depreciation. So plant and machinery will reduce by 10%, furniture by 10%, plant by 5%. What about building? Nothing is given, no depreciation on building. Plant depreciation 5, furniture 10, building 0. And they will also charge 5% by way of interest on capital. Prepare a statement of profit dividing the profit between A and B, and prepare a statement of affair, which means a rough balance sheet showing the position on 31st December 2010. This question is similar to previous problem, but in this question, current account is not there. In this question, current account is not there, so we have to adjust in capital account only. In this question, drawing is not there. But in this question, interest on capital of A will be calculated in a different way. First 6 months on 10,000, last 6 months on 8,000 rupees. Otherwise, the question was quite same. So what I will request you to do, first you draw these two formats as appearing on the screen. First you draw these two formats as appearing on the screen. Statement of profit and loss, statement of profit and loss, statement of profit and loss, right hand side two column. First you write down closing capital account, closing capital account. Closing capital you will get from this balance sheet. Closing capital you will get from balance sheet. I'll come to that. Add drawing. There is some drawing. I by mistake said no drawing. There is some drawing. Add drawing. Like the previous question, same format. Add drawing. Keep 6 lines blank. Point C, less interest on capital. Keep 6 lines blank. Point D, opening capital, less opening capital. Point D, less opening capital. And the balancing figure will be your profit. Balancing figure will be your profit. So this is the type of partnership type problem they are asking in the exam. I repeat, point A, closing capital account, point B, drawing, point C, interest on capital, keep 6 line blank, point D, opening capital, and point E, profit. After that, balance sheet we will prepare. Balance sheet as at 31st December 2010. This is closing write down. Opening is given. Opening is given. Balance sheet as on 31st December 2010. So we will start solving simultaneously. Freehold building question is silent. Write 6,000 because it's a building. So building will remain there. Student will sometimes say why we have written building, it is not mentioned in the problem. Because building is not something which will go away. Nowhere it is mentioned that building was sold or something. So therefore we will assume no adjustment in building. Plant and machinery 2000 less depreciation at the rate of 5%. Less depreciation at the rate of 5%, that is 100 rupees. So balance of plant and machinery 1900 rupees. Balance of plant 1900. Office furniture. Office furniture is 500 rupees. Less depreciation at 10%. 50. Balance is 450. Stock is given in the paragraph below. Stock was valued at 4,200. Debtors were 8,000. Debtors 8,000. Bills receivable 1,400. First paragraph below the balance sheet in the question. And cash in hand was 800. Cash in hand was 800. We have assumed building figure will not change. Right? Now we'll write down creditor on open account. Creditor on open account is 8,500. Creditor on loan account is 1,600. Creditor on loan account is 1,600. Now this question is silent about bills payable. There is a bills payable appearing in the opening balance sheet, but there is no bills payable in the closing balance sheet. They have not mentioned anything. So here we can have two assumptions. Bills payable remained 500 in closing balance sheet also. The second assumption is bills payable has been paid. So normally bills payables are issued for 3 months or 6 months. So we will assume paid. And if it is assumed to have been paid, closing balance is 0. Bills payable and building can't be compared. Bills payable are usually paid in short period of time. Building is a long-term asset. Building has a long life. Okay. So building assumed continues. Assumed no change. But bills payable assume has been paid. So now what my dear students will do, please help me and find out this capital account balancing figure. Capital balancing figure, who will reply? Capital balancing figure. Capital is balancing figure, please reply fast. Please reply fast. Everybody will try, not just few students only. Please reply. What is your capital account balance? So it is 12,650. Check. 12,650. 12,650. Individually we don't know, but total is 12,650. Total is 12,650. Individually, I will get to know once I prepare the capital account. Is it right now? So what we will do, we will come to our main page, statement of profit and loss, closing capital account 12,650. 12,650 is right. Everybody, very good. Come to main page, closing capital 12,650, add drawing, add drawing. Under that, write down uh, drawing of profits. Drawing of profits. So there are two partners, A and B. A has drawn profit 1500 and A has withdrawn his share of profit 600. Out of his share of profit, he has withdrawn. And then write down next point, drawing of capital. A has withdrawn 2000 rupees capital. A says, I don't want to keep capital so much, so I want to withdraw. So the total drawing will be 4100. 4100. Check. 4100. Okay. Less interest on capital. Less interest on capital. Under that, write down A. A will get interest on capital 10,000 into 5% into 6 by 12, and plus he will get interest on 8,000 into 5% into 6 by 12. So interest payable to A will be interest payable to A will be 450 rupees. Interest payable to A will be 450 and interest payable to B will be directly 4,000 into 5%, 200. 200 rupees. So total interest on capital is 650. Total interest on capital 650. Point number D, opening capital. Opening capital is 10,000 A plus 4,000 B, and that is 14,000. Opening capital of A and B is 14,000. So please tell me, dear student, what is the profit for the year? What is the profit for the year? So you will take 12,650 plus 4,100 minus 650 minus 14,000. So give me the answer now. What is the profit of this firm for the current year? 2,100. 2100 is right. Everybody, wonderful. And then who are the partners? A and B. A and B. The profit sharing ratio is 2 by 3, 1 by 3. So A will get 1400 and B will get 700. 1400 to A, 700 to B. 1400 to A and 700 to B. Is it right? So this completes my these two format. However, I also need to write down individual capital of A and B. I need to write down individual capital of A and B. So please come to partners capital account. Next format. Next format, write down. Next format, partners capital account. Next format is partners capital account. Name of two partners A and B. Two partners A and B. Buy balance brought down 10,000, 4,000. Already given in the question. Buy balance brought down. And buy interest on capital 450 and 200. Already calculated. By share of profit and loss. Profit and loss share 1400 and 700. To drawing of capital, A has withdrawn 2000 rupees capital. To drawing of profit, 1500 and 600. This is given. So what you have to do, the learned students will tell me the balancing figure now. Take credit side total first minus debit side. So what is the closing capital of A? 8350, and find out the closing capital of B. Closing capital of B is 4300. Check whether these two figures are right. 8350, 4300. Right? So we'll come to balance sheet now. Main balance sheet one more time, one last time, and write down capital. A write down 8350 and B write down 4300. For cross check, the total of these two should be 12,650. Very good. 12,650. The total of A and B is 12,650. 12,650. Okay. Any query on this question? Any query on this important question number 3? No query? So we'll come to now one more question. Question number 1. Question number 1. All of you please come to question number 1. Again a very important question. Question number 1. Ready? Say yes, we are ready for question number 1. A and B started a business. What do you mean by started? No opening balance. On 1st January 2009 with rupees 50,000 as capital, contributed equally. Contributed equally means both parties will pay 25,000. 25,000. Capital contributed was 25,000 and 25,000, but the profit sharing ratio was 3 is to 2. Profit sharing ratio is 3 is to 2. Their drawings were rupees 300 and 200 per month respectively. So drawing was 3,600 and drawing was 2,500. 400 rupees per annum. This is per annum now. Now they are saying they had kept no account except the following. They don't maintain proper account, but this is the information given to you. Machinery underline at cost. At cost means these figures are before charging depreciation. This figure given to you is before charging depreciation because they have not done an accounting. So you will understand, first year they purchase machine of 20,000, next year they purchased machine of 5,000. Next year they purchased machine of 5,000. So it has become now 25,000. Stock in trade, debtor, cash, creditor, outstanding balance. Now it is written bank balance as per passbook. Underline passbook. Passbook means as per bank statement. Now, since you are a good student, in the balance sheet that you prepare, balance sheet that we prepare, bank balance should be as per our cash book. Bank balance should be as per our cash book, not as per passbook. So this question will require you to prepare bank reconciliation statement also. Oh my God. Sir, this type of question do they ask in the exam? Yes. I am not here for your entertainment purpose. Okay. I am telling you this is a very different type of exam. What you see in your study material is not enough. Exam is at a different level. So we have to be future ready. We have to take some more advanced question. Anyway, this is a very easy question. Don't worry. So let us continue. I will have to later convert passbook balance into cash book balance by preparing a bank reconciliation statement. Next paragraph. Provision is to be made. Is to be made means student will have to do it for depreciation at 10% of the cost of the machinery. It is called straight line method. When you are providing depreciation on cost, it is called straight line method of depreciation. Is it right? As at the end of each year. So I will go to the previous table. Look at this machinery. So here we will provide depreciation 2000 rupees. Here depreciation will be 2500. And in second year, my accumulated depreciation will become, accumulated depreciation means total depreciation for all the years together. My accumulated depreciation will be 4500. 2000 of the first year, 2500 of the second year. So total depreciation will be 4500 rupees. Okay. I will require all these numbers, hence I am telling you right now only. Next point is debtors on 31st March 2009 include rupees 5000 for goods sent out on consignment at 25% above cost, and the goods were not sold until 31st March 2010. This is another new adjustment, consignment. Goods were sold on consignment basis. Consignee is not your debtor. Consignee is your agent. Goods lying with agent is the goods of the owner. Such goods should be valued at cost. Such goods should be valued at cost because it is your own stock. But what they have done, they have added 5000 rupees in debtor, which is 25% above cost. what will be the treatment of this item? Kindly suggest what will be the treatment of this line. Anybody who wants to reply, if this question comes in your exam, what will you do? So two adjustment I have to do. From debtors, you reduce 5,000. Goods lying with consignee is not debtor. So debtor 5,000 on 31st December 2009 debtor. So let us come to this. Tick mark this 50,000 rupees. We will deduct 5,000 rupees here and we will add in the stock. Add in the stock cost value. Cost value is equal to 5,000 divided by 125%. If cost is 100, profit is 25, selling price is 125. So the ratio is 125 is to 100. If selling price is 125, cost is 100. If selling price is 5,000, what is its equivalent cost? So the goods lying with the consignee will be valued at 4,000 rupees. Very good. Goods lying with consignee will be valued at 4,000. This stock that you can see here, tick mark, that will increase by 4,000 rupees. Debtor will reduce by 5,000 rupees. Okay. And then this stock was sold in the March. That means the same stock will not appear in closing balance sheet. It won't appear in closing balance sheet. It has been sold. If it is sold, the matter is closed. So up to this one adjustment. Now a new adjustment. A check for rupees 1,000 had been deposited on. A check for rupees 1,000 has been deposited on 31/12/2009. Check was deposited by us, but was credited on 2/1/2010. So in the bank reconciliation statement, I am starting with passbook. Please reply. Dear student, reply. You have studied bank reconciliation statement in 12th standard also. You are starting with balance as per passbook. Check deposited by us but credited by bank in the next year. So from passbook, if I have to find balance as per cash book, what will you do? Will you add, less, or do nothing? Three option I will give you. Add, less, or do nothing. If check has been deposited by us but not credited by the bank, we have passed the entry. We have passed the entry bank account debit to party account. Our cash book has gone up, but passbook is still lower because that entry has not come in passbook. So from passbook, if I have to go to cash book, I have to add. I have to add. So this adjustment will be added in balance as per passbook. Jan is right. Add was the right option. Okay. Okay, try one more. Should I erase everything to make it clear? Yes. So this adjustment you have to add in passbook balance. Okay, Tanya, very good. Try this one. Try this one. Check for rupees 2,000 issued on 26th December was presented on 3rd January. We have issued the check. We have passed the entry party account debit to bank. So our cash book balance, my left hand is cash book, has gone down. but passbook balance is still up because the check was not deposited by the other party. So passbook balance is high, cash book balance is low. So passbook has to be reduced. Passbook has to be reduced to make it equal to cash book. Okay. So this time the answer would be less. Passbook balance minus check issued but not presented will give you cash book balance. Okay, one more. A check for rupees 1000 was directly deposited by a customer on 27/12/2010. So I'm going to highlight it and you have to just tell me what you are going to do for this line. Check for 1000 directly deposited by a customer on 27/12/2010. Yes, Mr. Chetan. Now reply. Reply. Plus minus do nothing. There are three options: A, B, C. Add, less, and do nothing. Don't plus, don't minus. What will you do in bank reconciliation statement? Most of the students are saying less. Most of the students are saying less. What is this? A check for rupees 1000 was directly deposited by a customer. Now we are preparing final account. We are preparing final account. First of all, you keep in mind, I am not teaching you bank reconciliation statement chapter. We are preparing final account. We are preparing final account. So in final account, we need to write down exactly what was the balance in our bank. One customer has already deposited the check in the bank account. This information I got to know later. Customer deposited the check directly in bank account, we got to know it later. Nowadays it happens in our office also. Some student purchases some pen drive, Google Drive or books and he directly deposits the amount. We get to know later. Since he has already deposited the amount before the end of the year, it means this transaction should be recorded by us in the debtors account. In the debtors account. So we are actually going to pass an entry. It is not a BRS item only. We have to rectify it. Our books of account are wrong. Debtor has deposited the money in our account and we have not recorded. So it is an error of omission. Now rectify. Entry in our books will be bank account debit to debtor account. Bank account debit to debtor account 1000. This should be the correct treatment because it was an error committed by us. In the previous two, we have not committed the error. Bank has not recorded, but here we have not recorded a transaction which has happened because we were not aware by that time. So now we will pass an entry bank account debit to debtor account, and once we pass the entry bank account debit to debtor account, it means we have also recorded the transaction. We have also recorded the transaction. Bank has also recorded the transaction. When bank has also recorded the transaction, we have also recorded the transaction. Hence, it won't affect now my BRS. So practically what happens? Practically we will first check whether there is any direct deposit in a bank statement. If yes, we will pass the entry. And once we pass the entry, there is no difference between bank book and passbook or cash book and passbook, and therefore it is not a BRS item. Rather you deduct debtor. So go to the question on the screen. Question: debtor of 60,000 rupees. Sorry. Debtor of 60,000 rupees minus 5,000. Tick mark. This debtor, he will get angry on you if you show 60,000. He said, I have already deposited 5,000. Last adjustment, and then this question is almost done. A check of rupees 5,000 deposited in December 2010 was dishonored. A check of rupees 500 deposited in December 2010 was dishonored, but no adjustment was made for this. Again, my question is same. We had deposited one check in the bank. That check got dishonored by the customer. Customer dishonored the check. When I found my bank statement, oh, my check which I had deposited got dishonored. So what will I do? Whether I will pass an entry first or whether I will put it in the reconciliation statement. Is it our mistake? Yes. When the check got dishonored, I should have passed the entry. I should have passed the entry. Just a minute. Please wait 1 second. When the check got dishonored, I should have passed one entry. Debtors to bank. It is a error which we have committed. We have not recorded this entry. So now record the entry first. Now record the entry. Debtors to bank. When you record the entry debtors to bank, debtor balance will increase by 500. Amount becomes recoverable from the debtor. We have credited the bank account and bank has also debited us. So it is not a BRS item now. Not a BRS item because we have also recorded this transaction. Bank has also recorded this transaction. When both the parties have recorded the same transaction with equal amount also, where is the question of reconciliation? Okay, it will come in reconciliation statement in your 11th and 12th standard when it is only a question of reconciliation. But today my question is not a reconciliation. Question is final account. So in the final account, if you find some entries are there in the bank statement which you have not recorded, first record it. First record it, then prepare the bank reconciliation statement. So once I record this entry, this item will not come in bank reconciliation statement. But what you do, debtor will have to be increased by 500 on 31st December. Go to this one, tick mark debtor, one more tick mark. This debtor will have two adjustment, one minus 1000 and one plus 500. Then you will get the correct debtor figure. And this debtor also had an adjustment for goods sent on consignment 5,000. The stock has an adjustment plus 4,000. These machineries have adjustment for depreciation. This passbook balance we need to identify what is cash book balance. So this is a different problem. Let us begin. Question is determine the profit for both the years 9 and 10 and draw a balance sheet on 31st December. In this question, we will not prepare our normal trading and P&L account. We will prepare statement of profit and loss. Like the previous two questions, question number 2 and 3, here also we will find out the profit by preparing statement of profit and loss. Credit side item we will add, debit side item we will deduct. The balancing figure will be profit for the year. Okay, so please write down the formats. Once the format is ready, it will take only 5 to 10 minutes. Don't worry. We will complete this question in 5 to 10 minutes. Once you give me the format. Are you ready? Say yes. First format, write down statement of profit and loss. Statement of profit and loss. Right hand side, two columns. It's a problem of 2 years. Concentrate. If this question is asked in the exam and if you have not done enough practice, you may find it difficult to solve in the examination condition. So you must practice today and later also. Right hand side, two column, 31/12/2009, 31/12/2010. Format. Point number A, closing capital account, write down, because current account in this question is not there. Closing capital account. One line blank. Point B, add drawing. Add drawing. 5 lines blank. 5 lines blank. Point C, opening capital. Opening capital. One line blank. And point D, profit. Point D, profit, 5 lines blank. Point D, profit, 5 lines blank. Okay, everybody, come on. So after this, you write down balance sheet. 2 columns you will draw. Question has only asked you second year balance sheet. But second year balance sheet you can't prepare unless you complete the first year balance sheet also, because that first year balance sheet will give you closing capital account balances. Okay, so I will prepare both the years balance sheet. Right, balance sheet as at liability side, 2 columns, 31/12/2009, 31/12/2010. Asset side, 2 columns, 31/12/2009, 31/12/2010. Liability side, write down capital. Capital A, B, 2 lines blank. Creditors, creditors, 1 line blank. Outstanding expense, outstanding expense, 1 line blank. Outstanding expense, 1 line blank. Asset side machinery, asset side machinery, less depreciation, less depreciation, 2 lines blank. Then write stock, write down stock, 3 lines blank, 3 lines blank. Write down debtors, 2 lines blank. Cash, 1 line blank. And bank. Bank will be as per cash book, not as per passbook. We will have to find out by preparing a working note what is the balance as per cash book. This is my second format. Then you come to working notes. Working note 1, and it is a problem of 2 years. It's a problem of 2 years. So you have seen this is first year and this is second year. Format is more or less same for both the years. So write down 2 columns on the right side. A, partner A, partner B, partner A and partner B. First year credit side write down by bank. First year credit side write by bank. By bank 25,000. 25,000, that is capital introduced 50,000 in the ratio of 2 is to 2, 1 is to 1, sorry, in the ratio 1 is to 1, capital introduced. Then just keep the format ready. By P&L account, debit side to drawing, debit side to drawing, and to balance carried down. To balance carried down. Then draw one line here. This is year 1 will get over. In the same format, we'll start year 2 also. By balance brought down. By balance brought down. By profit and loss account. By profit and loss account. Debit side to drawing. Debit side to drawing. To balance carried down. To balance carried down. After this, you write down working note 2. Bank reconciliation. Bank reconciliation statement. Bank reconciliation statement. Bank reconciliation statement, right hand side 2 column. 31/12/2009. 31/12/2010. First line write down balance as per passbook, which is given in the table in your question book. Balance as per passbook 6,000 and 8,000. 6,000 and 8,000. Then you write down add. Some item we will add and some item we are going to deduct. Keep some space blank here, 5 lines. Okay. This is my working note 2. One more working note write down. One more working note write down. Daters. Working note 3, daters. Right hand side 2 columns. 31/12/2009. 31/12/2010. Daters also 2 columns. Dater balance as reported. Dater balance as reported. Dater's balance as reported in the question 50,000 and 60,000. We'll come back to this. Point number B, add. Point number B, add. 2 lines blank. Point number C, less. Point number C, less. 2, 3 lines blank. So this is your format. This is your format. Any query now? If you write in detail, you'll get full marks. If you write half, you'll get half marks. Equation is simple. Full is to full, half is to half. Okay. Impress the examiner with the help of working notes drawn correctly. So in working note 3, first point write down dater balance 50,000, 60,000. In working note number 2, bank reconciliation, balance as per passbook 6,000 and 8,000. These two figures we have already reported. In partner's account, by bank account 25,000, 25,000. Done. Let us start. Now it will take only 5 minutes. Have some patience. A and B started business on 1st January 19 1st January 2009 with rupees 50,000 as capital employed contributed equally by both the parties sharing profit in the ratio of 3 is to 2. So write down here 25,000, 25,000. Their drawing was 300 and 200 per month respectively. So on the screen, drawing for A will be 300 into 12 and B will be 200 into 12. So A is drawing 3600, B is drawing 2400. Similarly below this line, in A column 3600, in B column 2400. Whatever information they have given, first you spread it. They had kept no account except the following information. Now come to balance sheet. In balance sheet, first is machinery at cost is 20,000, 25,000. Less depreciation, write down accumulated. Accumulated means total of year 1 and year 2 in the second year. First year does not make any difference. So depreciation in the first year is 2,000, 10% of 20,000. Second year depreciation will be 2,000 of previous year is already there. Depreciation of second year is 2,500. So total accumulated depreciation will be 4,500 accumulated. For the year 2, 2,500, year 1 and year 2, 4,500. So you draw one line here. So the balance in machinery account will be 18,000 and 20,500 and 20,500 and 20,500. Okay. Otherwise, we'll have to prepare a machinery account, but that will take time. So just understand, in the balance sheet, depreciation charged is accumulated depreciation. So depreciation of year 1 is 2,000, year 2 is 2,500, total depreciation for both the year 4,500. Next item in the question is stock in trade. So stock, write down 30,000. Stock, write down second column 30,000. Debtors, write down in the first column 50,000 less goods sent on, or we have prepared a working note. Sorry, wait a minute. Instead of writing here, why don't we go to working note on debtor? Working note 3, debtors reported 50,000, 60,000. Less write down goods sent on consignment. Goods sent on consignment 5,000. Goods sent on consignment 5,000. And write a note, cost of goods sent on consignment. Cost of goods sent on consignment will be 100 by 125 into 5,000, that is 4,000. Cost is 100, selling price is 125. This goods sent on consignment will appear in balance sheet. So I will go back to balance sheet. This will appear in balance sheet. Below the stock, write down goods lying with consignee. Goods lying with consignee 4,000. Second column dash. These goods were sold before the end of second year. Okay, back to our question. In our question, cash has no adjustment. 2,000. Second column 500. Cash 2,000 and 500. Our creditor, liability side, creditor 30,000, 20,000. Outstanding expense 4,000, 3,000. 4,000, 3,000, and balance as per passbook we have already written. Balance as per passbook we have already written in working note 2. So this completes the table given to you. This completes the table given to you. Any query on that? No query. Next line. Provision is to be made for depreciation at 10%, already done. Daters on 31/12/2009 include 5,000 for goods sent out on consignment at 25% above cost. This is also done. And the goods were not sold until March 2010. This is also done. A check for rupees 1,000 had been deposited on 31/12/2009 but was credited on 2nd January 2010. This will come in BRS item because here the bank balance is not correct. We have deposited the check, means we have passed the entry, bank has not passed the entry. So this I will have to write, add check deposited. Check deposited but not credited by bank. Check deposited but not credited by bank, 1,000 rupees. 1,000 rupees. Passbook figure is not correct. Next point is check of 2,000 issued on 26 December 2010 was presented on 3rd January 2011. So we have issued the check, means our cash balance has reduced, but passbook balance had not reduced. So under point number C less, check issued but not presented, 1,000 rupees. Check issued but not presented, 1,000 rupees. So now you will write down therefore balance as per cash book. Therefore balance as per cash book. In the first year it is 7,000. Second year also 7,000. Second year also 7,000. 8 minus 1. Wait a minute. There is a, I think this number is 2,000. Let us take the total again. It is 6,000. 8 minus 2, 6,000 is right. And 6 plus 1 is right. So 7,000 and 6,000 kindly transfer to balance sheet. Both figures will go to balance sheet. 7,000 and 6,000 on the screen, last line on the asset side. 7,000, 6,000, working note 2. Working note 2. These are the two adjustment in BRS. Now come to working note number 3. In working note 3, read the last two lines. A check of 1000 rupees was directly deposited by a customer. Entry bank account to debtor account. So it will come into less check directly deposited. This entry we are passing bank to debtor. So once we are passing entry bank to debtor, it means this item has already come in our bank account and it is already there in passbook account. So it is not a BRS item. Rather, it is a adjustment to be done in debtors. Last adjustment, check for 500 deposited in December 2010 was dishonored but no adjustment was made. Entry would be debtors account debit to bank. So you will write down check dishonored. The amount is 500. The entry we are writing is debtors account debit 500 to bank 500. And here we are passing the entry bank debit 1000 to debtors 1000. So now you tell me the correct total. The correct total is 45,000 in year 1 and this is 59,500 in year 2. Check the total 59,500 second year. This 45,000 and 59,500 we will transfer to balance sheet. We will transfer to balance sheet on the screen. Data, write down working note 3, 45,000, 59,500. Now take asset side total and minus liability side item. You will get closing capital as the balancing figure. You will get the closing capital as the balancing figure. So take 18,000 plus 30,000 plus 4,000 plus 45,000 plus 2 plus 7, 9,000. So this is 1,06,000 minus 30 and minus 4. So this is total of A and B together is 72,000. Total of A and B together is 72,000. And then you come to second year, take 20,500 plus 30,000 plus 59,500 plus 500 plus 6,000. So that is 1,16,500. So that is 93,500 is the total. Check the answer. Is this right? So now I'm going to use these two numbers to find out the profit for the respective year. Is it right? Yes. So 72,000 and 93,500 come to the main page, statement of profit and loss. Closing capital 72,000, 93,500 as per balance sheet. The source is balance sheet. Add drawing. Drawing of A B. A's is 3600, B is 2400. So 6,000, 6,000. Both the year 6,000. Opening capital was 50,000 in year 1. This is given in the question. Closing capital will be 72,000. Closing capital will be 72,000. Therefore, profit will be first year 72 plus 6, 78 minus 50, 28,000. Correct? And second year 93, 500 plus 6,000 minus 72,000 is 27,500. Then write down here sharing of profit. Point number E, sharing of profit. A, B. The profit sharing ratio is 3 by 5, 2 by 5. So first year is 16,800 and 11,200. Second year, check the answer, 16,500 and 11,000. First you confirm this profit is right and allocation is right. Then I will transfer to partners capital account and close capital account. So first you have to complete the balance sheet. From the balance sheet you will get closing capital. Then find out the profit, apportion the profit. Now this profit you transfer to capital account credit side. Please come to partners capital account credit side. On the screen working note 1, by P&L account 16,800 and 11,200 and below 16,500 and 11,000. Right. Now we'll close the partners capital account, two balance carried down. First year close. First year credit side total is 41,800 minus 3600. So that will give you 38,200. Check 38,200. Second year 36,200 minus 2,400 is 33,800. Please check. This closing balance you transfer to next year opening balance. So next year write down by balance brought down 38,200 and 33,800. And then again find out the closing balance, individual partners closing balance. Is everybody getting the same balance? Please confirm. Is everybody getting the same balance? Yes. So now what you do, just transfer it to main balance sheet and your answer is over. So partner A and B in first year 38,200 right here 38,200 and 33,800. Cross check, the total should be 72,000 in first year, correct? Second year 51,100, 51,100 and 42,400 and 42,400. Tanya is right. Wonderful. Amazing. And cross check, the total should match with what we had calculated earlier. If this total is matching here, it means more or less you have done correctly. So this balance sheet is already telling. Capital balances are also telling. Capital balances are also telling. Any query on this question? No query? This is telling. Okay, so this answer is over. Today's lecture is over. Now we'll continue tomorrow at the same time. We will complete this topic and we'll try to start a new one. Okay, thank you. Bye bye.